And officially, good morning, happy Tuesday. Welcome to the Market Watch Group Tuesday opening bell. My name is Scott. I'll be your host. NVIDIA, GE, Apple. Oh, those are some good ones for sure, especially Apple. GE only a little less so, and NVIDIA is quite strong as well. Very nice. Love it. My name is Scott. I'll be your host. I might have said that already. I forgot. Here's the disclaimers. Everything we do is for education, illustrative purposes only. Nothing's intended to be a recommendation to buy or sell. Decisions made should be considered at your own risk. We're not brokers or advisors. Yada yada. Okay, let's stick to the formula. We'll look at the opening futures and the news and talk about what it means and how it looks to impact us. Glenn put out a nice update to our trade alert on Levi that it hit its first target. You might have taken some gain already prior to the weekend. You might have a little bit more to take. You might be out of it. You might still be in a piece, thinking about how you're going to tighten up your stop, etc. And then you'll do that for all of your trades. That's what we mean when we say mindset for open trades. We'll look at the opening range, especially as we're putting in these extra 15 minutes. It might not seem like much, but it does allow us to kind of watch as we start to pop out of the opening range. Some people, the opening range, and what do I mean by that? So the opening range for me is 20 minutes. So I take it to a 5-minute chart. I have 4 5-minute candles. I look at the top, the bottom. You can essentially draw lines to represent it and then say, okay, when we break it to the upside, we expect the day to be more bullish. If we break it to the downside, we expect the day to be more bearish, at least the first half. Not for the day, the first half. Because a lot of times traders make moves, then they go to lunch, then they come back, and then it could be completely different. It could be an extension, could be a reversal, could just be flat for the remainder. But that would definitely be what we're using to set up our potential day trades if you are day trading. We'll walk through, of course, our entire list, but with a focus on our opportunity list, which is the focused list that we put out. We build it every Sunday. We put it out. All the emails have that focused list throughout the week that you can keep an eye on. That doesn't change. If you're ever like, oh, does the list change from day to day? Are you adding, taking away stocks during the day? No, it does not change. Okay. Lastly, trading plan section of the week. That's an important one, right? That's an important one because we're on risk management this week. We're talking about section 4, which is risk management. Very important for us. Okay. Let's get started. Let me get here. Get these things reloaded and then we'll pop in. Okay. Futures say what? Flat. S&P minus 0.04. Dow up 0.09. NASDAQ down 0.01. Russell up 0.19. Now, why is that? Why is that important? Well, the Russell is definitely leading, right? That's our leader right now for over 3 time frames, right? They're leading over the 22 day, the 66 day, and the 133 day. It's what's caused our, if we're going to stop for just a second and take a peek at our posture, that's what's caused our major market to get here to the 1. Good point. Stephen D says we started the same way Monday and ended up bullish. So, yeah, we're just sort of coming in, processing, and then watching as the market moves from here. What's the news? Powell on deck. Jer Bear. Jer Bear is who we're looking for, right? So he will be speaking later this afternoon. Let's actually take a quick peek at the economic calendar. I forgot what time it was. It's all Fed speak on Monday and Tuesday. So we had a bunch of Fed speak yesterday. We have a couple of S&P reports that come out in the 15 minutes. Flash services PMI, manufacturing PMI. Both are expected to drop a little bit, but I'll be honest, no one's really paying attention. They're not big reports. A couple of Fed chairmen, Fed chair people speaking this morning, and then at little bit after. So there's that post lunch. We have Jerome Powell speaking around 12:35 Eastern. Make sure we recognize that that's Eastern time. Tomorrow, new home sales, 1 Fed speech, not much there. Home sales are expected to be pretty flat, 652 last time, expecting 650 this time. Unless we see crazy information come out. Right now, the market's just not paying attention to that information, right? To the real estate market information. That's just not something that we are seeing right now. Okay. Thursday, it starts to pick up. Of course, we have our great friend, Chicago Fed, the hallowed, the revered, Dr. Sir Austin Goolsbee. I don't know if he's a doctor or if he's knighted. I just feel like with that name, it should be Goolsbee. Jobless claims. So there's been a lot of talk about weakness in the labor market. But I just want to point out, there haven't been any negative jobs, like we haven't lost jobs. There's the opening bell. And our jobless claims, which is a lot of people just sort of get complacent with that Thursday report. It's like, oh, it comes out every Thursday. It doesn't. It's a really important one that we have relied on over the last couple of years. It's not let us down yet. And we have a pretty specific set of criteria that we look at. And we say if it gets above 250 to 260, but 250 for 3 weeks consecutive. So we jumped 2 weeks ago to 265 and we're like, oh. And then the next week it popped back down. And now we're expected to stay in the 230s. Okay. We're not gonna get overly concerned until we see that happen. Certainly, there's the downward revisions have us concerned a little bit, but we haven't seen anything go negative yet. Okay. Then we have Thursday. We have the GDP. We really need that to stay. It's at 3.3. Forecast is 3.3. We definitely need that to happen. We need that to stay in that range. For one thing. Next, we have some inventory. Not a ton, because the big news is here. This right, we have income and spending. Income expected to drop slightly from month to month, 0.4 to 0.3. Spending staying flat, 0.5 to 0.5. And then we have the PCE. This is the Fed's favorite. Remember, we have one in at the end of September that's representative of August. And then we'll get one more. We'll sneak in one more. I'm going to pop over here to the Fed predictions for 1 second. Our next Fed announcement is on the 29th of October, which means we're very likely to get one more PCE in before that. And so my thought was the next set of data was all we're going to get, but we might actually get a little bit more. Good morning, Vladimir. Good to see you. And what is the expectation? A slight uptick on the month to month, a slight uptick on the year over year. But we have a slight downtick on the core calculations. And then we have flat on year over year. Okay, so as you look at it, it's like stable, but kind of creeping up. And if it's creeping up, and we believe that the Fed has shifted. Remember, the Fed has two mandates: keep inflation down, keep jobs up. And the focus has been on keeping inflation down. That's why they've left rates where they are. But now all of a sudden, with the job weakness, they're thinking, oh, now we have to shift focus on the mandate to keep jobs up, which is what led to the cut. And if the focus is on keep jobs up and inflation is not, super concerning, which if it's just a marginal increase, then I think that would lend itself to another potential cut. Now, if you notice, and we keep talking about this, but when we say probability, it's not really like, oh, that's a 90% probability. What this means is there's a 90% probability priced in. That's what's priced in. So people have already traded as if this is happening at a 90% probability. So if there's a shift where the data is like, oh man, we just had a jump in inflationary data, that's going to make people think, ooh, I don't know, maybe the Fed's not going to be able to cut this time. The Fed has talked about too. It has definitely moved into a more dovish stance. We've seen that. You guys know I like to put out the old axiom, don't fight the Fed. That's super helpful to have the Fed in position like that. So there it is. That's what we have coming out. We will know, we as in you and Glenn will be discussing those numbers Friday morning before the market, and then you guys will get to discuss the impact with me on Friday afternoon. Okay, let's get to the market itself and take a look at this open. And there it is. In fact, Stephen, yesterday I think we actually opened slightly down, right? I think we opened down like 0.17, 0.2, something along those lines. And then you see we had that full recovery and then some. We didn't get volume, or did we? I was showing, I think I messed up my I did. I was Looking at that. Sorry, I'm like, where did my volume go? There it is. Average was 71. We got 69. We got average volume, which is actually pretty good because a lot of times you'll see it's just kind of, you'll have extended periods where it's like all below average, all below average. So even average volume is pretty solid for a nice day. Real quickly, as Glenn put out this morning on this Levi trade, we have hit our first target. Now, here's what I want you to notice. Based on our trajectory that we were expecting, we would have wanted it more at this 24.15, was it? 24.05. It was somewhere just above 24. But you can see it's starting to stall out. Our stochastics has turned. If you've already taken a piece, if you haven't, I'd be thinking about taking a piece. If you're going to carry it, my thought would be make sure that you tighten your stop. You can see this is giving us the ability to do so. So it's a good trade. It's a winning trade, but it's not getting all the way, which is, look, that same thing happened on an Apple trade recently. Right here. Same thing happened. Good trade. We survived this little hiccup. Good trade. Got up here. Didn't get all the way. Got out yesterday. Good. Okay. Hopefully I'm one of those little pops up. But yeah, good. If not, if there's still a piece left, there's an opportunity to tighten your stop. This is one Sandy was talking about. And here's the other thing. So as we extend the times, the expectation is we're going to be discussing more trades that aren't all going to be alerts. This is one that we discussed, an entry. It didn't end up an alert, but it's one Sandy took. It's one I took. So there's going to be more of these opportunities where it's like, hey, here's what we're looking at. We have this set up. This is how we would build the trade. You know, only 2 or 3 of them are going to be alerts each week, and the rest of them are going to be extra opportunities that you can decide, yeah, you know what, this matches my rules. I don't have a technology trade on. I need one, or I want one. So, okay. Yeah, that thing was amazing. Sandy, how high did you ride it? I had a hard target set so that if it hit the target, it took me out. So literally when it got to this 250 level, gone. And then it kept going. I'm like, whoa. Okay. You can live with that. Took away the target and stayed with it. Okay. Look at Sandy letting profits run. I salute you. All right, let's get to the full watch list. If you weren't aware, a lot of times I tell people that I measure traders oftentimes not how they have winners, but how they have losers. When I say, oh yeah, I trade, and I'm talking to somebody and they're like, they start telling fish stories, right? About like, oh, I did this and this. I just sort of tune it out. I think oftentimes that good traders are more apt to talk about losing trades. But here in this beautiful safe space, I know you have, as we all have. That's why I'm going to say here, we expect brags. I want brags. I want you to highlight when you really knock it. Not like, oh, I just happened. Because when we do this, when we take off targets and we're like, I'm going to let it run. That's a skill. That's really hard to do. Right? I want you to think about like the pull that you feel at times. You have a winning trade and you're like, oh, and I'm going to describe it. What's the pull that you feel? If I don't take the profit now, the market's going to take it back from me. What, the market, the person that's going to come and snatch your, like, what? No. But we feel that, right? Internally, we're like, if I don't take it, and it leads to a cut your winners short mentality, which is actually what 80 to 85% of just the general population or traders would have a tendency to do. Cut your winners short, let your losers run. There was a Nobel Prize winning study that was conducted on that. it's very powerful stuff. It changed how I trade because when I took the little test, I'm like, oh God, that's me. I do that. Apple trades at 380%. John Welsh says, love it. Silver's another good example. Absolutely right. So, that's a mindset shift and a skill development. We have to first completely shift how we perceive. We have to basically rewire ourselves. And then we have to build the skill around what techniques can I use to allow to help promote my winners running, and not like, oh, I got to hurry and take it. And anyway, so when you do it, you highlight it here so we can all applaud. At this point, though, is Apple a trade? No, of course not. It's way overextended now. We need a consolidation, whether it's a flag, whether it's a pullback. Please post the test. Gosh, that's a hard thing to post, right? Let me think how I can do it. Let's do it tonight. If anyone wants to come, we can do it. It's Prospect Theory. The authors and what's interesting is one of them wrote a book recently, which is I would highly recommend, called Thinking Fast and Slow by Daniel Kahneman, Kahneman, Daniel Kahneman. The other author who was part of the Nobel Prize winning team was Tversky, Amos Tversky. Let's try it tonight. It's or maybe I can do like a let me think on that, David. Let me see if there's a way I can like post it. I'm going to try to. And then we'll talk through the results because it is a fascinating study. I way back when I used to do live, boot camp style workshops, which was my laboratory of understanding trading psychology. I actually used to give it every time, and it was just amazing to see the lights come on. What's funny is that's David's comment's amazing. That's actually very unique, quite unique and quite necessary in us as traders. And that is to learn about ourselves, because 9 out of 10 times when things go wrong, where do we look? We don't look at the market. We look in the mirror. That's when things go wrong. I stop and I'm like, what did you do? I'm talking to myself. So that's great. I love that. Okay, let's go through the watch list. Great conversation. Let's get to what we're talking about with trading. And let's find something that's setting up. I know we have quite a few on our list, and we'll see what is most likely to turn into a trade alert today. What I love is when we do this, I love to hear people after the alert comes out where they're like, I already took it. God, that makes me happier than you can imagine. Okay, Apple, not. ADM, I bailed back in this area after giving it probably more time. I mean, I gave it every opportunity I could. And the only reason I did was because we had the market posture score that we do. Where's my drawing tools? We had this, which basically held on all the way through without ever really breaking. That might have gotten some out. In fact, I think I paired half down. Was that a Friday? No, I think I paired half down, and then I'm like, oh, I got the other half. It feels great. And then right away it did this, and I'm like, okay, that's it. Right? When we got this, and then it turned back around, and then that was it. At this point for me, I now see this in a consolidation where we have one of these downward sloping lines. And what do I need it to do? I need it to break out, come back, and there's a trade. Right? That's what I need. Like this. Break out, come back, trade. And then another trade, and then another trade, and then another trade. So once this completed, then we had 1, 2, 3, 4 trades in a row. That's why I like waiting for that. It's a great signal. It's a very helpful signal. but for me, it's not there yet. Amazon. Amazon was one that we were actually over here thinking there's a signal, and then it pulled back, and if you weren't in it, the thought process was, is this a hiccup that if it turns out we trade? And I said, yeah, I'm absolutely open to it. And now it broke. So there's nothing there on Amazon. Am I going to kick it off the watch list? No, because it's Amazon. It's the 800-pound gorilla of consumer discretionary. So it's always going to be on my list. ANET. We had a great first day, not a great second day. This is kind of like where I'm at. It's got to go from here. This now has to hold. If it can reemerge and get back on this trajectory, great. I want to make sure I stay with it. But at this point, if it breaks down below this level, that becomes the end of the road. And I want you to notice that I want to give the trade as much opportunity to develop as I can. And a lot of that comes from, again, our posture score. We're at a 5.25. That's a good, it's not 6 or 7, but it's a good, solid, bullish score. I'm a little more reluctant to take losses, a little bit more willing to give trades a little bit of room to breathe. And you can see when we have like the Reddit trade or what we had on Apple recently, where it's like, we can't just like, if it hiccups a little bit, be like, oh, that's the end of the road. APH. There's a hiccup on a trade we made. It got there 3 days late. We have to make sure we stay with these things. Now, this is a tough one because this would be where I would have to take my stop off in the morning to not get picked off on the open. And then if it starts to recover, great. And if by the end of the day it held support, even better still. And then we move, a little pause, and then we move, and we're there. And now this thing just won't stop. Look, the strength of the trend. What do I need now? I need a pullback. ABGO. Oh, goodness. Look at what we have here. ABGO. Stochastics is turning. If this finishes in this area or even close, that's a go. Right now, I would consider this to be an anticipatory trade where you're like, hey, I'm anticipating it's going to go. Not now, not 19 minutes in, but I'll tell you what, this is one of our first and top candidates for today. Definitely looking for something there. Beautiful trend. Financials. If you're in it, you're doing well still. We still have a piece of Citi. Or I hope you still have a piece of Citi. We'll get there in a minute. But we just haven't gotten a new signal since back here, right? And again, look what you have. Now we're pretty close to some targets. I'll have to pull up the Citi trade. I can't remember exactly. BAC, I know this is one of Steven's favorites. Looking pretty strong. BTI, I'm kicking BTI off the island. This was put on out of defensiveness. You can see it got a little piece here and then just... not much, so it's gone. Citi. Not Siri, Citi. My phone sometimes wakes up and it's like, what? We're 2 days late, and we're basically, what's my target here? Let me pull it up. Sorry, let me grab the exact details here. Here we go. Let me zoom down here. Take profit at 103. We've passed that. We're looking for 107. So we're only a couple of points away from 107. A couple of points away. The Heikin-Ashi looking fantastic to help you. Look at this beautiful Heikin-Ashi that you could just be moving your stop, moving your stop, moving your stop, moving your stop. If we cross, maybe one more day, I might shift this to a 4 hour. Look at that beautiful 4 hour. You can see thought he's holding on a swing trade. Absolutely you are. Well done, as you should. You can see that on the 4 hour, if you get too aggressive, it'll pick you off. Right? So we can't really shift to the 4 hour until we're really getting closer to the end of the trade. This one's great. Time decay will kick in. Now it will kick in a little bit more, but at this point we're going to have more intrinsic value too, which is going to help insulate us to some extent. But that's a great observation. There's no way this trade would last. Today's Tuesday. If it makes it to Friday, I'd be surprised. There's no way it would last through the weekend at this point, right? So we know we're in stage 4 of this trade. Stage 4, nearing completion. Stage 1, pre-trade. You do your due diligence. You mark your stops, your targets, your time frames. You build the trade. You make sure the reward to risk ratio looks good. Everything you do before the trade. If it meets all rules, passes all tests, you take the trade. Now you're stage 2, waiting to develop. In stage 2, you're watching to see, has it gone wrong? Do I need to close? What do I need to do? And you're waiting to see if it can move into stage 3. So stage 2 is kind of like you're actively being passive, if that makes sense. Stage 3 is it's kicked into gear. It hit the momentum stage. We got the growth Heikin-Ashi candle started up, and you're like, okay. Now I have a tendency to have stage 3 in 2 parts. And it's marked by the 50%. So the first 50% is stage 1. If we cross that threshold, which is basically the next like 50 to 70 or 80% of the target, that's late stage 3. And that's where I might start aggressively moving the stop. That's where I'm going to take some profit if it gets to my a certain level. Stage 4 is nearing completion. Train's coming into the station. We've got to make an adjustment, or things could get nasty on us. So as we near the end of the trade, whether it's time or target or whatever else, we've got to be ready to make those adjustments and understand the context of the trade. There's no way for me this trade will get past Friday. Great observations. Okay. Love it. Good stuff. That's a good one. Let me get out of that candle. Caterpillar, my goodness, just a beast. Just a magnificent beast. Did not take that one. Certainly wish I would have. CCJ needs to consolidate. CLS just kind of running sideways. Capital One. Capital One is not nearly as strong as AXP for me, so I'm holding off on that. Coinbase. Coinbase could be going through a little sneaky reversal. There's that consolidation. It broke through and got up here to a new high. Right? We can see that it's crossed, but the sellers don't have a lot of power. If this thing can stabilize and turn for a higher low, that's a valid opportunity for us to consider. Cisco. So Cisco had a hiccup. I know at least some of you survived. I still have a piece of this. And same kind of a thing. Like from here, this is it now. This thing either goes or fails. There's no more like, oh, it's just a hiccup. There are no more hiccups. It can't hiccup and then hiccup again and then hiccup again. We give it some grace, and then we have to be a little bit more of a tight leash. But it looks like it's trying, so let's see what happens there. Anyone still have some Cisco? Let me know. Delta? I don't know. It's just, yes, Bob C says, Well, it's nice to see that trying to move here. It would be great if they did. Delta looks a little off. I mean, you could say that was a signal, but it's really struggling a little bit there. Stephen D as well. DoorDash on a bit of a flag pattern here. Starting into a consolidation. DoorDash actually owes me some money, as a matter of fact. So I'm definitely keeping an eye on the flag potential. I'm looking at the potential for a pullback into here. Anything in this that turns, valid, viable, potentially ready to go. Diamonds, look at that. We started flat, Dow's up 0.6. DocuSign is a new one brought to our attention yesterday by an attendee. Nice bit of strength here. There could be an argument for a flag. Well, that's something we would want to wait and see later in the day. EA, a bit overextended. Okay. And now we have another one that we are like, look at this. Nice consolidation. It's stabilizing. It's pinching. If this were to close back where its high was today, I would say that's in the running. So add that to the list of a potential for today, a today alert. Look at this beautiful trend. I think this one looks great. Ford. It's kind of choppy. I never really liked what I saw through here. I don't think there's much for us there. Futu. So Futu looked like it was maybe going to. Then it dropped one more time, but held the 50. So if it stabilizes and bounces off the 50, then I think, you know what? We've seen it happen. That's valid as a perspective. If you think, actually, I'm in a consolidation, then you would wait for it to do this. So both can be true. If you hear me say, I see it in a consolidation, but it's above the 50, and you're thinking, I like when I can catch things bouncing off the 50. Both things can be true. You can either wait or you can, because there's times where I wait and it goes like this. And I'm like, missed it. Okay. We'll keep an eye on it. Fiber. Now here's the deal with fiber. What do I have? I have the candles turning. I have the stochastics turning. What's the problem? It doesn't have good options. It has hardly any options. If you trade this, it's a stock trade. That's it. There's no options there. When there are options, but they're absolute garbage options. Horrible spreads. You know, it's basically the market maker is like a guy in a trench coat with sunglasses on. And he's like, do you want to come into my party? Do you want to come into my house? And you're like, no, buddy, you look super shady. Because if you step in that door, you'll hear the door shut behind you and lock. And you're like, what have I done? Okay. GE. Round of applause for Sandy, especially if she's still in it. Very nice. That's one that's on our list. We saw this turn here. I was like looking at that. I just didn't. And then it did this. I don't know. I ended up not pulling the trigger on it. Fantastic though. Gold still running. Just accelerating again. I'll tell you this. Here, if you're trading gold, be careful. It feels a bit like a shark frenzy. And what shark frenzies up has a tendency to shark frenzy down. Gold doesn't really sustain parabolic moves very well. Not for long. Google starting to consolidate, kind of a flag type pattern. I told you now, Google was one that really smashed up, got to our... So Google was one, I believe we had an alert here. And it didn't quite make it. And then it had a second trade here. I don't remember if this was an alert. I think it was an alert. Did we alert both? Or did we only talk about this one? And I know I traded it. And when it got this move, I'm like, windfall. Took my profit. And then watched it do a whole nother one of these. Goldman, still running. Hood. This is one that we talked about but didn't flag as an alert. This one is moving, but not quite as well. But still looks pretty good. Howmet, no. IBM, same thing. Same thing. It's getting close. And you're gonna, like I said, you're gonna see more of these. The more we want you thinking not just about alerts, but about the other ones. And we're gonna be going through that look like this. Intel. Hood as a trade, Sandy. Asking about the viability. I mean, it's too late for an entry. It was back here, but if you're in it, It might be time to even pull a little off as it starts to veer a little bit and then hope it regains that trajectory. IWM, small caps continue to look strong, almost 1% up now. Levi, as Glenn flagged, pretty close, still moving. That one's a winner, and we're trying to see how much we can squeeze out of it. Lumentum is in a setup. It's not even close yet, though. I mean, I would say I would like to see it stabilize by this 152 mark down here. But it's starting to set up. Las Vegas Sands, yeah, I think, is PJ here? PJ is still holding on to this. This was a signal here, started, turned, got out, took the loss. It held the 50 and started to bounce, and then it did this, and now it's trying. It's a tough one. That's a tough one right there. Live Nation, there's a second one. That's looking quite good. I haven't evaluated the options as well here. They're better than the other, but this is absolutely lined up for an alert today. Let's go look real fast. Let's go to the options. Okay, so first there's fiber. Here's fiber. What do you want to, so as a teaching moment, what do I notice? I notice there's no weeklies, not necessarily disqualifying, but certainly makes me think might not look great. Then I come to these Octobers, these front month options. That's where I'm going to find the most. And I look at the open interest, and I don't know why, but nobody's trading these. Exactly, David. No open interest. Literally 30 contracts. If you joined these 31 people and you bought this for $1, you would immediately have a worthless trade. Worthless. You buy it for $1 and your broker's like, and you're like, what's it worth now? And your broker's like, nothing. Nothing. It's worth nothing. Kind of an extreme version of this, but I mean, you're like, oh, well, what if you go further in the money? Yeah. You buy it for $470. Immediately, it's worth $175. You just took a 70% loss. Can't do it. Stock or not at all. But let's go take a look at Live Nation. Maybe it's a little better. Let's be hopeful. Once again, only monthlies and extendeds. But let's open it up and see. Much better. Much better. Is it ideal? Ideally, I see thousands and even tens of thousands, but I at least have thousands in here. The option I would probably be looking at would be the 170s or the 175s. 10% or less is the rule of thumb. So, I have options in here that I could consider. So, for a stock alert, possibly fiber. For an option alert, Live Nation. Give me your thoughts. Does this make sense? I hope it does. What would we do with this thing? Well, you know what I'm going to do. I'm going to put a stop likely right underneath here. I'll measure. I mean, you can see we had this move was pretty good. This move was even better still. Make a composite of that and see where it might put us. Thinking, I don't know, 182-ish. In line with this trend, maybe even a little higher, maybe even 185. Somewhere up in that vein. Yeah, that's what I'd be looking for. Okay. Meta. Didn't quite ever get to this, but you can see it kind of hit this resistance. So we've got a little bit of a mini cup and handle right here. Okay. If this thing stabilizes and turns, that's still a higher low. And that's still viable. Well, I'm still going to look for it. Maybe not this week, but maybe late in the week. Morgan Stanley still pushing higher. I got to say, I feel like the move that we're seeing in financials. Remember, one of the things we're waiting for in our market posture is we would like to see one more growth sector join the leadership club. right? We want to see it join the leadership club, which means we need either financials or industrials. Either financials or industrials need to pop up. Other than Caterpillar, we're not seeing a lot. Well, we see Caterpillar, we see GE. But I will tell you this, in financials, we're seeing a lot of strength. And I'm just wondering to myself, are we going to see that roll into our market posture and give us that next little bit? Fingers crossed. Microsoft, we thought maybe trying for a sneaky reversal. I don't know. It's a really kind of a choppy deal right now. Micron, can't stop, won't stop. Just got earnings, I believe. Or is it this afternoon? Afternoon. Yeah, you can't do anything but watch that, but that's been a workhorse. Netflix, very, very sideways right now on Netflix. Northrop Grumman. This is a maybe. It's either a consolidation or it's bouncing off the 50. We've talked about a couple of these. If you see, it's like those pictures where you're like, what do you see here? And it's like, I see a young woman looking to the left. And someone else is like, no, that's an old woman looking to the right. This is a consolidation and would need it to break out, pull back, higher low. This is holding support at the 50. Stochastics showing improvement from momentum. Either is valid, I would say. Absolutely. NVIDIA. Yeah, this is the one I said as out of Sandy's trades. I said Apple and GE were fabulous, and this one was okay. And you can see why. A lot of sideways in here. Trying to get started again. We'll see what happens. PGY, setting up. You could still call this a flag, and you still have room for a little bit more to make it a pullback. But I'm definitely looking for a signal this week on Pagaya Technologies, and I'd like to say it, Pagaya. Try it at home. You'll find it fun as well. Pagaya. PLTR. Yeah, this one just kind of sneaky bounce. I think a couple people traded it. I'm not one of them. I wished I did. It looks pretty good. And if you survived this, well done. Pat yourself on the back. That's you surviving that. That's hopefully implementing some of the principles we talk about here. Qs are actually kind of paused where others are looking strong. Roblox, looking for this to pull back and maybe give a signal. Reddit, come on down. Reddit, you magnificent. Reddit, you just had to survive this initial hiccup. And it got where it needed to go about 4 days late. That's it. 4 days. That's all. That's not uncommon to see this type of a thing. It was a great trade. A beautiful trade if you were able to survive that. Now what? Now it made a new high and pulling back. And I'm saying to myself, anywhere through here, I want to see it slow down, find some support, and then get me that bounce, and then bam, let's go. Back again. Looking for another bite at the apple. You know that when we find momentum, our objective is to stick with that momentum. RF, sideways, nothing there. Rocket Lab. Yeah. I'll tell you what, yesterday was valid. Today, you could actually get in at a better price. If you thought yesterday was valid, it's still valid today. It's just sort of pausing. So this is one I would consider as well. And I'm going to go look at the numbers and see. This could be one. Silver, like gold, new highs, but looking a little overextended. SoFi, overextended. Financials, can't do it. The SPY, kind of flat, but doing okay. Russell is the leader today, 0.9. More small caps pushing forward. TME, TME broke. It could still try to hold the 50, and I'm going to keep watching it, but you can see it just sort of as a bit of a letdown. It just could not. It could not get what it needed to break this resistance. 1, 2, 3 attempts, could not get through. Tesla overextended. That was never for me. TSM, my goodness, just smashing forward. This is an interesting thing. We may want to kind of just really focus on semiconductors and be like, okay, who do we want to be representative of that group these days? Uber pulling back. Melody has some in the money covered calls that if they get to expiration will be called out, but it looks like it could maybe revert. Give you a chance to make some rolls. Be patient. Upwork went a little bit parabolic. Now starting to move into a consolidation. There could be one more. They tend to come in threes, so let's just keep an eye on this and see what we think. Bullish dollar index, kind of flat. Visa never really did much. Today's VIX, just kind of holding. If this rolls over because we're getting some bullishness, that'll be useful to us. We're wondering if we're going to get a lower high this week to earn back 1/4 point. Walmart setting up, most definitely. This is one I'm really looking at. It's got a nice cup and handle. Here's the handle. Anything above the 50 is prime entry for us. If that happens, you can all but guarantee I'll put one on because I definitely like to get little not defensive, but quasi defensive. It can move when the market's moving, but it adds a bit of defensive protection. So certainly looking for one there. What does this tell us? Yeah, there's a bunch of things that are overextended. If you're in financials, you're kind of looking at the end of the trade. But there's a lot of good stuff lined up. There are trades ready for us. We are 5 1/4 on our market posture. So what's the takeaway? Be ready. Be ready. Don't force trades, but be ready when they come. Questions, comments, or concerns about the watch list, anything that we saw here today. Hopefully you feel like you have some ideas that you're thinking about trading. Uber at 1017 is at 97.5. I'm actually hoping it gets caught. There you go. You got some time on that one too. Yeah, that'd be a nice one. That would just kind of lock the gains in. Yeah. I have a feeling Melody's really enjoying her covered call foray. Okay, lastly, in the last minute we have, where's my trading plan outline? I don't have the outline. I'm going to the sample. Okay, this is a good one here. Risk management, portfolio heat. Now, you can download this sample right here. The way I got this is I went in. Let me show you. I'm going to show you two things, because there was a comment that came in about this. So let me just pull this over. Here is us. And first and foremost, if you come down here on the left-hand side, not in the learning courses, but you should be going through those if you haven't yet. But up here in the resources, I need to change this to just resources because the alerts are actually up here now. Resources, if you go into the group downloads, you have the trading plan outline, which is blank, and then you have a sample trading plan, which is filled out. It's been there for 10 months, you guys. It's been there at your disposal. That will produce this. This is a fully fleshed out trading plan, right? So as you look at it, here is my risk management. Portfolio heat. Maximum heat for this portfolio would be 12%. If conditions are hard to read or high volatility, it drops to 4 or 5. As it settles and starts to redevelop, I'll put it back to 7 or 8. I'll reevaluate every 100 trades according to Kelly criteria. What is Kelly criteria, you ask? It's on the trade log. That is a risk optimization formula. Trade risk, 1 to 2% for directional trades, 2 to 3 for delta neutral, which would be things like a calendar spread, an iron condor, a butterfly, which I will never have as many of. If you're wondering, is this somewhat oriented around my trading plan? The answer obviously is yes. Maximum number of trades will be determined by forecast, by portfolio heat, number types of trades, blah, blah, blah. So this is just giving you a sense of what does it look like to fill this out and actually think about and turn this into actionable steps. Adjustments will be made for portfolio heat. Is a Kelly of 40% good? It's phenomenal. In fact, you'll never get there because psychologically you can't take that much risk. Remember that what I do with Kelly is I actually take 70% of it. So if I did Kelly of 40, I'd actually be at 28. But that's saying that at any given time, you might be willing to risk up to 28% of your entire portfolio. Now that means that you've probably had some good results lately, but so whenever we're looking at Kelly, Kelly is the math, but we have to balance the math with the psychology. Risk adjustments, correlation to market posture. I don't have anything in there. I should probably put something in there and re-upload. Tsunami indicators to hedge, the high or low on the VIX. That's the major one that I look at. Defensive rotation in major market, which is the Dow rotating to the top. That's one that I'll look at. Defensive shift in the sectors, utilities or staples rotating to the top. Any of that has me thinking, whoa, things are not looking good. Lastly, when do I take a break? If you draw down by a certain amount, if you have too many losing trades in a row, this is mine. This is the one that I tend to use where I'm like, oh, I got to take a break. It's me. It's the chimp broke out of the cage and is smashing the keyboard. And I'm like, what am I doing here? And I just need to find a little bit of balance. I need to reset. This is an important one. I mean, there's a lot of really good information in here that creates the rails for risk that help us from day to day. So we're not constantly like, oh, should I reevaluate? Look, it's all mapped out. Spend the time. Give me an hour a week, and I promise you, you will create such a phenomenal trading plan that really becomes a roadmap, right? A lot of people, when they think trading plan, it's an outline. It's an outline that's just sort of touches on a couple of things. I want a full plan. If you trade like a hobby, it will pay you like a hobby. If you want it to pay you like a business, treat it like a business. Good stuff today, everybody. It's great to see you. I always enjoy having coffee with you and waxing philosophically on all things market related. I hope you enjoy the rest of your day. Don't forget, tonight, Glenn will be here at a certain time, 7:30 p.m. Eastern. I will come in an hour after that, and we will we'll run a search. Ooh, that's the other thing I wanted to show. Sorry, real quickly before we wrap up. Remember that our search, if you go to links over here on the left-hand side, these are all the things that we go spend time at. Basic bullish search. If you click it, it runs it. It's that simple. You click it, it runs it. That's it. It's ran. All you have to do now is plug in the sectors and say, oh, you know what? I want to run, I want to take a look at consumer cyclical and see what we've got. Great. Bam. Now you're in there. Now we can go one industry at a time. And yeah, there's some beautiful stuff in here. Look at some of the strength that you're finding in here. So, Nicasio, I didn't even see you today. You made it to the end. Great to have you, my friend. Great to see everybody. Have a great rest of your day. As always, happy trading.